in Roncantero's courtyard. Wonderful.
I think we're at 52 or 54 year historic lows. I mean, I'm 51 years old. We've never been here in my lifetime. It's unbelievable. The average interest rate over the last 38 years is 9.125%. I did the math. Middle America. And I think you said the largest asset is their mortgage. Actually, their largest asset is their house.
Right.
Yeah, and their largest asset is their house. And yeah, their mortgage controls that asset, and it's how you strategize that mortgage and how you optimize your equity and all the opportunities that you have. Keep in mind, equity on paper is not equity recognized or realized. It's not until you capture that equity it becomes real. It's all mental up until that point.
First of all, I think most Americans will agree the mortgage is the biggest financial planning decision they make. When you look at the size of the mortgage, you look at how much money they pay towards that mortgage over the course of a lifetime, it's the biggest financial planning decision they make. And there's two big mistakes that most people make. You know, they put so much focus on what is my rate, what is my monthly payment, and what are the costs of closing this transaction. So they don't look at the loan over a year, over 2 years, over 3 years. They look at over 1 month. You know, what's it going to cost me today to get that loan, and what's my monthly payment next month? So two things. What's the cost over time? Let's look at an interim period, you know, 3 to 5 years. What's the cost of that mortgage? And how does that compare to different options? And then let's look at a long term, 15 years, 30 years. What's the cost? So when you're looking at a loan with points versus no points, what's the cost over 3 years, 30 years? And then most importantly, how are you going to become debt free? What is your strategy to get debt free? Every loan officer, every time they meet with a homeowner, don't just ask how long are you going to be in the home. Everybody asks that question. And it's a valuable question to ask, but ask them, how old do you want to be when you're debt free? When I ask people that, 30-year-old wants to be 40-year-old. 40-year-old wants to be 50-year-old. 50-year-old wants to be 60-year-old. Great. And then ask them the next question. This is a tough one. Based off your current loan and your current trend, how old are you going to be? And you know what? Everybody is, best case scenario, they're 5 years from where they want to be. Most of the time, they're 10 or 20 years from where they actually want to be. You know, they're 30 years old, they want to be debt-free at 40, but they're getting a 30-year mortgage. So that's a question that's tough to ask, it's tough to answer, but here's what you do. Here's what you do if you're a homeowner. You look at the details, break it out, look at the current scenario you're in, what is the cost going to be over 10 years, 20 years, and then listen to your advisors. Say, advisor, show me the options, and I say, put it on paper. I want to see it in writing. I want to see it documented. So listen and have your advisor put it in writing. Those are my two suggestions.
All debt is not equal. Okay, and made me realize the optimization of debt, and beyond just the tangible dollars of the debt. I mean, what is the taxation benefits you're receiving as a result of that debt? How are you realigning your debt to make sure that you're optimizing that debt opportunity? And it is opportunity because debt, a lot of people see it as a negative. No, debt is leverage. Debt is leverage. It allows you to leverage to a larger asset base for the opportunity and possibility to create more equity in your life.
Bingo.